Lesson of the day and the real deal today is going to be relative strength, relative weakness. Everybody knows about it. You try to find it in the market if you can, but it's about detecting it as early as possible. And if you can do that, then you can be trading the right names in the right areas in the correct direction, because following the trend, hey, if the trend is going up, you want to be in the strongest name. If the trend is going down, you want to be in the weakest name. It's an easy concept on the surface, but joining it is not always the easiest thing in practice, because I can show you, and I always like to use extreme examples here, and I'm going to jump right into things by showing you Alphabet, which in real time, the Qs are actually tanking right now in real time, so you're going to see Alphabet pulling back. But I'm going to show you the example, which is very, very clear. Like, you have a range-bound day in the market, $1.50 range, up and down, no fresh highs in the Qs, and it's really easy to see Alphabet's trending into the upside. So first off, I'm showing you guys the triple Q. If you're going to have relative strength or weakness, it's got to be versus something. So whether that is, and there's lots of ways you can do this. This could be a stock like an Alphabet. It could be a stock like Apple or Microsoft, one of the Mag 7, or just something, a component of the Qs, a tech name against the Qs. It could be an NVIDIA or an Intel or an AMD against an ETF, a SOX, or one of the semiconductor ETFs. It could be something along the lines of an EV name against an EV ETF, or maybe even against Tesla. Or simply, it could just be if one stock is leading a group, like meme stocks are going crazy, and maybe GameStop's leading the way, for lack of a better term, and it could be something like an AMC, which is either stronger or weaker. So you've got to peg it to something, and that's the first important choice you make. It's easy enough to do in tech, but you've got to identify a couple of things which are at least decently correlated on a normal day. And if that's true, then you can start to look for that relative strength and relative weakness. The most simple of that is tech name and tech stock. So that's where I'm going to lead us with here today. Once you've identified that, there are a few things that are pretty obvious that you're going to want to look for. If a stock is trending in one direction, it's probably strong, higher highs, higher lows. But it's what is happening with your indicator early that's going to give you that indication as to what you should be doing. And I'm going to stick with this Google example, this Alphabet example early on. So I'm going to come to the chart here. I've got the Qs up next to it so that you can see, like at the open, it's going to move it over so you can see just at the open. So we open here, we open there. Immediately at the open, the Qs break down. So this is your first indication of relative strength in Alphabet. The Qs break support and make a new low at the open. There it goes. At about 9:50, 20 minutes in, you're making a new low after breaking down. At the open, Google goes up, and at the time the Qs are making a fresh low, Google is holding. So it's not that it's moving away from the market. The market came down and Google came down, but the market came down, breaking its low and making a new low. So now the first lower low got put in, and Google held the bottom. Now, it'd be easy to say, okay, it's relative strong, go long. It's not that simple. You want to observe this behavior a little bit longer. It then retests, and as the market goes back up, retests the high, Google retests the high. Okay, well, now it's just basically the same thing. You've got testing the top, you've got testing the top. This is where you get your first indication of relative strength. On the next pull back in, when you sell back down, breaks consolidation and makes a fresh low right back into the bottoms on the Qs. Google, however, holds right in front of 141 in VWAP. It's at this point that you can now identify when this is moving up at 10:57, you are now holding above VWAP and trying to break back out on Google. You're making a higher low, but you're retesting the high. At that point, it becomes clear. I like to think of it as, give me 3 points of information. That first open test, we're loosely following each other. One's making a lower low, and Google's holding the low. Then when they get back to the top, okay, top, pull back in. They're still following each other. But when you go all the way to the bottom of the range, I need that stock to be holding the top end of the range and making that higher low. That's your indication that it's happening. And once the cues start breaking out, you get this consolidation break on alpha. Whether you're long off of VWAP or on a clean breakout, you've identified it relatively early that is a strong name. And as a matter of fact, just to boot here, you can now see what's happening. This is continuing to hold that trend. You pull back into a triple bottom on the cues, and Google is pulling into its breakout price and bouncing. Again, that is very bullish. That is a bullish move for Google. It is relatively strong. Now, that is a pretty simple example. I don't think it's anything that's going to maybe blow anybody's mind, but it's important to find that confluence when you're looking at something like that. I'm gonna adjust this Intel chart because everything was flowing to the downside on Intel relative weakness, and then they had an event going on and everything flipped. So it went from a short into longs, and look at the craziness after. But if you simply look at the early trend here, this is something in the other direction. Now, one of the easier setups to find is if you have a range-bound day in the market and something is breaking out of its range. This gives you an easier indication as to when you have some relative strength or weakness. It can happen in either direction. In this case, it happens to be Intel to the downside. So remember, we observed that the market was playing inside of the range, barely breaking up, holding that initial low at 950, 100, like a 150 point range here on the cues, but holding the top and the bottom. During that same time, so when you made that fresh high at 10 o'clock, what happened on Intel was a complete reverse. It broke down at the open. It never even got back to the support level. And at 10 o'clock, what is happening when this is market's getting back to the highs? Intel is consolidating at the bottom. That was a quick indication. Now remember, on Google, you couldn't really tell until the cues were making that second bounce off the lows. That's when it was really obvious you had something going, and then it broke out. With Intel, it immediately looks weak, but how you know it's relatively weak is when you're making fresh highs and bouncing off those highs, Intel's already putting in a lower high. It's not even putting in the same high at 44.10. It's putting a lower high in. That is relative weakness right there. It would be good enough for a short trade if you were holding a consolidation top in this bottom of the range here. That would be good, but it's even better than that. It's making lower highs and lower lows as the futures are holding a top end of the range. So that gives you a couple of ways that you can play this. One, the obvious short it to VWAP or short it to that support level, or simply short and look to add to shorts unless the futures break out the tops. Because you're not really taking this add-on here unless you're confident the market's not going to take out the top, and at 1024 when that happens, I mean, you're looking at these cues and they're still looking relatively weak. When you get back in to make it a double top up here, this is now at 11:15, you're talking about a double top. That's after the news has come in. So you're holding these lows and holding this consolidation, and for the entirety of this hour, or 40 minutes, let's say, from 10:20 into 11:06, for those 40 minutes, you are trading in the bottom of the range. So it's consolidating in the futures, holding a lower high, and you are trading in a range to the bottom in a downward trending stock. The key to this, and you'll always see me do this in the live show in the morning, after the first 10 to 15 minutes or in the first 10 to 15 minutes, I've got the plays I'm looking for, but I'm always looking for relative strength and weakness. When the futures get to a key level, what am I learning about a stock? In this particular case, I like Intel short 45, nowhere near 45. But it was trending down and it was relatively weak, so it meant jump in, find the consolidation levels, and as long as the futures didn't break out, I was pretty confident about it. So relative strength and weakness is something you want to identify early on. It's about finding something to peg it to and then looking for multiple indications that your trend is correct, and on top of that your stock is going to be making outsized moves relative to whether it's the index, whether it's to an ETF, whether it's some kind of a pairs trade. So use it to your advantage. Relative strength and weakness, it is something that you can put in your toolbox every single day as a trader. That's the real deal.